Alright, so you should have your MetaTrader 4 set up. What I want you to do is, if you have these slides opened, I want you to exit all of them out to where it just looks like a clean chart. Your chart background may be black, maybe you may have all green candles, so that's what we're going to do right now. We are going to go to Properties, you're going to right click, Properties, and you want to at least, it all really depends on you, but the background I like to have white and I like to have clear so you can see what's going on, and just make it more clear so it can pop more for your eyes. And so if you want to pause this video and set your settings at this, you can do that now. And after you get back to the video, we're going to go on and move on from here. So I want you to notice at the top there is File, there's View, Insert, Charts, Tools, Windows. All this kind of looks complicated. It can look complicated right when you just started and just get started, but it's not. If you think about it, all this is all that you'll need to use. This is all that you'll need to know, or all that you'll need to use. So if you can think about it, simply just understanding, well, file, log into my trading account, easy. You don't really need to use too much of this if you want to, print setups and whatnot. View, if you want to change the language. Toolbars, leave those just how they are. Status bar, leave that. Now symbols within View will show all the symbols that are or are not available within your Market Watch. And Market Watch is simply all the currencies, all the currency pairs. So all these currencies, a lot of currencies are paired up together, and we are simply betting which currency pair is going to be stronger than the other, or which currency pair is going to be weaker than the other. So let's move on to where we were at. So Market Watch, you have Data Window, Navigator, Terminal, Strategy Tester, Chats, Full Screen. As you can see, all these right here are the same as right here. Insert, Indicators, we will actually move on to that one here in a little bit. Lines, so you have lines, you can do channels, you can do all these tools are available to you. Now, do you need to use all these tools? No. You would use the text if you are going to mark up your charts and possibly set some reminders, on what you see and whatnot. Charts, zoom in, zoom out. All of these things, though, up here are pretty much right here on the second level. It's a little bit easier. So you can zoom in to your chart here, zoom out. Right here is when you have multiple currencies down here below. Okay, so I want you to go ahead and just open up. I want you to click here, and I want you to open up Euro USD. And how you're going to do that is you're going to right click, and you're going to go to Chart Window. And once you do that, it will simply open up a simple chart. Now, it may have went back to the black, which is fine. You would simply go and set your properties and set your colors. Once again, I apologize. But after you do this, after you do that, what we're going to do is we're going to save this template. So we're going to save these settings right here. We're going to save the template, and you can name it whatever you want to name it. I have lots of templates in here. you can save it as whatever you want to. Just so you know that whenever you pull up a chart the next time, you can load up the same type of look that this one's showing right here. So we can zoom in, we can zoom out. This little button right here, for example, the market is live right now. And as you can see, let me give an example. When I pull the chart back, I unclick. If I click this button, it pulls me back to the front of the chart. So you can see that. This button next to it, it gives me space over here. It takes away that space when I uncheck it. When I check it, it gives me space. Space to do markups and see the market more clear of what's going to, happen. So you just have some room there. That's what it does. Okay. The next one, you then have your indicators. Now, we as traders, as retail traders, independent traders, there has to be a way, there has to be something for you got to think about this. Who created this software? Somebody created this software. Somebody created the market. Somebody created these candlesticks. Somebody's controlling this. There's always there's a reason for everything. So the reasons that we have these indicators is in order for retail traders to have an indication of what the market will do. So in indicators, let's just go to, let's just choose fractals. And fractals are simply these little triangles. And what they do is they indicate the highs and the lows of the market. So as you can see, this is a low point right here. As you can see, it rose, it created a new high. And what creates new highs and new lows is times in the market when the market pulls back. Okay, as you can see, this triangle is higher than this one. This one is higher than this one. This one is higher than this one down here. It's a lower high, or a higher high, higher low, sorry, higher low, higher low, higher low, higher high, higher high, higher high, higher high. And now you can see it's starting to run out of steam. And as you can see, it created lower highs. And as it was going up though, it still created some higher highs. But this is also a pattern. These are patterns that you'll learn soon enough. So these are all there's hundreds of indicators, maybe even thousands, that you can choose from. And they all are based off a different type of algorithm that are pretty much based off of human emotion. Okay, so let's move on. So you have your time frames. Right here you have the monthly. So just so you know, since we're on the monthly chart here, price is on the right and time is on the bottom. The dates. Time is on the bottom, price is on the right. Mm-hmm. So for example, we have Euro USD. So whatever currency pair is first, the euro, whatever is first, that is what's rising. Whatever is second, that is what's falling. Now, when I say rising and falling, does that mean that that the euro is rising? Well, yes, it is. But for example, when it's falling, does that mean that the dollar is falling? No. That simply means, since these are paired up and they are battling against each other, that simply means that when it falls, that means that the US dollar is gaining strength over the euro. And when it's rising, that means that the euro is gaining strength, more strength, over the US dollar. That's all that means. So that's how all these currency pairs work. That's how all of them are in here. Unlike commodities, where you just have like oil. Oil is its own thing alone. It's not paired up with anything. So that's what that means. So we are on the monthly chart. Now, these little sticks that you see, they kind of look like candles. They kind of look like candlesticks, and that's what they're called. They're called candlesticks. And since we're on the monthly chart, each one of these candlesticks is 1 month. 1 month, 2 months, 3 months, 4 months, 5 months, 6, 7, 8, 9. All right. And as you can see, 2004, 2005, 2006, 2008. Obama got elected right here. US dollar started to gain strength over the euro. 2010. As you can see, 2001, World Trade Centers got hit, and the dollar started to fall against the euro. The euro started to gain massive strength over the dollar up until 2008, when President Obama was elected. And as you can see, the dollar started to gain strength. I'm not saying that's because of him that it started to gain strength, but you get my point. I'm not trying to get into politics here. But each one is a month. So if I go to the weekly, each one is a week. Each candle would be a day. If I go to the day 1 daily chart. So this is what's going on today right now. This was yesterday, the day before, so forth. Then we have the 4-hour chart, the 1-hour chart, 30-minute, 15, 5 minutes, and even down to the 1 minute, where you can see that price is, well, kind of staying still right now. But eventually you'll start to see the candles starting to form. So I want you to think of this as a microscope. And when you look in a microscope, you are zooming, you want to look at the organism, you want to look at whatever it is, and then you want to zoom in, and you want to see the finest details. So that's what we're doing here. We are zooming in to the market, and we are there's 2 types of trading. There's what you call swing trading, which can be anywhere from 3 to 7 days, 3 to 5 days. It can be 1 to 2 months. It can be 3 to 6 months. Swing trading is long-term trading. So, for example, you see this. You see, it's like a swing. You swing. You swing. You fall, and then you swing again, and then you fall, and then you swing again, and you fall. This is called swing trading. Now, everybody has their own preference, but with a small account and us trying to build a small account, we are trying to intraday trade. Now, if you have $100,000, $500,000 and up, then you can definitely swing trade off of the monthly and the weekly charts. Also the daily, but you can do it off the daily without that much money. But what we are wanting to do is we are wanting to intraday trade. We are wanting to be in and out of the market within anywhere from 3 to 8 hours, and possibly even less, possibly around 30 minutes to an hour. It just depends. Depends on the setup, depends on the patterns, depends on what is going on. So, all right, I want to bring your attention to this area right over here. So I'm actually going to draw a shape, put a rectangle right here. This is what I want us to focus on. So as you can see, it went up over here over the years. Now it's coming down, it's coming down, it's coming down. And it's still in a downtrend. This is what you call lower highs and lower lows. That's when you know you are in a downtrend. An uptrend is higher highs and higher lows, as you can see. So we're going to zoom in, and you see how it kind of made like a W shape. If you can see like the W shape. So we know that we're in a downtrend, and overall the trend is going down on the monthly chart. So we want to zoom in with our microscope, and we want to understand and know the best place to enter a trade within intraday by looking at the bigger picture. So now we're going to go to the weekly, and as you can see it just expanded, because inside of the monthly there is candlesticks within candlesticks. It's just spread out now. Does that make sense? We're on the monthly, then we just spread it out. That section that I put a rectangle over. So it's spread out now. It's spread out into weeks instead of months. So as you can see, this is 15, 16. This is about a year and a half right here. Then we go to the weekly. Now it's still a year and a half, but there's just more going on inside of it because we spread out the time frame. So we go to the daily, and it's even more spread out. And we can look at that here. We're zooming in. We got the bigger picture, and now we're zooming into the smaller picture. So as you can see, for example, let's look at this monthly. You see the pattern, it's up, down, down, up, down, up, down, up, down, up, down, up, down. Now we go to the daily. See how it's up, down, up, down, up, down, up, down, up, down, up, down, up, down. Okay. So all the market is with these candles and the patterns is it is patterns inside of patterns. That's all it is. The market repeats itself. Like they say, history repeats itself. This is so true because it does. Everything is repeated. And just like what happened in the Great Depression in history, that honestly is eventually bound to happen as well. Just by looking at the chart and just by looking at how all this is played out and how human emotions alter currency exchange prices and also our economy. So we zoom in, and We go to the 4 hour, we zoom in even closer. We go to the hour, we go even closer. As you can see, now we're so zoomed in, like it's hard to tell. This right here was this peak. This peak right here is this right here. You gotta find, you can match up the days, match up the day along with the price, and you can find where it is easily. 30-minute, even closer. 15-minute, we're going in, starting to see some movements. Now, the same movement within the monthly charts, you can earn the same type of money inside of the smaller charts. So for example, if you rode this out, say with using small volume, and we'll talk about that in the next video, with small volume, and say you made $10,000 over the span of a year. Well, you can do that same type of damage on the hour chart within a day. Okay, and we'll go over that on the next videos. I'm going to actually cut this video off and move on to the next video about what is a pip and more about patterns and whatnot. So that's where we'll go from there.